Well, thanks again for joining us here on a Monday. I'm Marlin Bohling with you, your tour guide to the ag commodities. Interesting stuff going on in the ag trade here so far today. It's like it can't find its way. It's like it's lost. It just keeps drifting around all the time, higher and lower, and it doesn't know what it wants to do. Here to help us examine our market action, I call on my in-house guest today, none other than Mr. Chris Swift. Good morning.
Good morning. I'm doing great.
Of course, Chris is with Swift Trading, based right here in the Nashville area. So I'll show you what I'm talking about here, and I want to get your thought on what this means, if anything, to the market. Let's take a look at our corn market here right now with our quotes from bar chart. So again, it just kind of floats around either side of unchanged here. May corn, now it's a penny and a half higher at 6.45. We have December corn down 2.5 at 5.54 1/4. Now, I swear, Chris, when I looked at this this morning before you came in, it was at 5.50, and now we're at 5.54 on December. So, there you go. It's just one of those meandering markets, I call it. In soybeans, same thing. May is down 0.5 cents is all. 14.92 is the last trade. November is unchanged at 13.09 3/4. How's that for being quiet? Now, on the wheat, we were stronger overnight, and now May Chicago wheat has turned lower, and now it's actually trying to work its way back up again, but we're still down 1 3/4. We're at 6.73 3/4, and July is down a couple of pennies right now. In Kansas City wheat, you have May 2 1/4 higher at 8.66 3/4, but it's been quite a ride here, Chris. We were, I think, 15 cents higher last night. And then it actually probed the lower side there a little bit ago this morning, and now we're back up 2 1/4. So it sounds, if you look at the price, it looks like it's a quiet trade, but it's just been chopping all over the place. On spring wheat trade right now, you have the Minneapolis May down 1 1/4 at 8.70 3/4. So what is the market telling us anyway when it just chops around on either side of unchanged like that? I mean, what do you do with that?
I think it's a hurry up and wait. Because we're right here in the middle of what everybody wants to plant. We've already gotten the aspects of what the prospective plantings are going to be from last week. So I have a feeling that what we'll see going forward is we all really want to get out in the field and get that field work done, but different regions have different weather issues with them. And here in the southeast, we're a little bit wet, and Midwest are a little bit dry, and in the north, they're still under the snow cap. So you were telling me, and I remember expressing last week that I had noticed about a week ago there were some fields already planted. You said you had seen that too. I did.
To the northwest of Nashville.
Clarksville, just right up before you get into Clarksville there were some fields already planted and up. So it was very interesting to see that they had already gotten some germination there and some emergence.
Very big?
No, not a lot. No. Maybe 3-4 inches, something like that.
Well, still, I mean.
Yeah, I mean, it's at least above the ground, so I'm not really sure how they get that in.
Cool to me. So, okay, if we're getting into planting season now, that means there won't be a lot of cash grain coming to town, right?
I wouldn't think so. I think from that last decline that we saw in the markets, I think there was a lot of farmers selling attached to that. So I have heard that a lot of the bins are clean now, and that makes kind of sense because now if the elevators own it or the ethanol and have the inventories there that they need, now they own the supply that they have and may not be back to the market for a while.
A long time ago, and, this is back in the caveman days when I first started this, but somebody told me that the grain markets can't rally really until the commercials own about 70% of it. Is that true?
I've heard that before, and I probably wouldn't lay that out as a statistic, but I think that once they get control of it, then it just kind of sits there for a while, and they can do with it what they want when they want. So.
Okay. Keep that in mind. All right, we'll come back in a moment. We'll take a look at our livestock trade here on a very confusing Monday morning when we come back. All right, we're back with you along with Chris Swift over here. He's with Swift Trading here in Nashville. Now let's dive into our livestock trade. While the grain markets are very choppy, let's see what livestock is doing. Well, no great shakes here, Chris. June live cattle, 17 cents higher at 163.27. But if you look at what the low was, it was 162.55. So guess what? That means we're on both sides of unchanged, just like on the grain. August is 25 higher at 162.55. So again, a meandering market here on livestock too. Let's see what feeders are doing. Well, of course, they're lower. The May contract down 65 cents now at 204.75. But we had been as high as 205.50 57, so that means they were on both sides of unchanged today. August is down 25 right now at 222.35. Let's see what the lean hogs are up to this morning on a Monday. Well, we have the April down 62, but you have the active May contract 30 cents higher. We'll go with that one, Chris. It's 82.50 right now, just about 27 cents under the high of the morning. June is 22 higher, but it's mixed. If you go to the deferreds, they're a little bit weaker. So again, another choppy market. It looks like May has been on both sides of unchanged.
Yep.
That's the theme of the day, I guess, over here. So in livestock trade, we had the cash cattle market just very sharply higher again last week, and now you open the futures up today, and it's like, yeah, whatever.
Well, a lot of it's expectations. The futures market just builds in expectations, and then when those expectations are met, there's not a whole lot left to do because that's what they had anticipated to have happen. So we see that mostly in the feeder cattle market, where we have really wide ranges between our current price and it's reflected by the feeder cattle index, and then the futures price is $20 and $30 wider at some point out in the future. And we all know that we're short of cattle, and we just wonder, is that expectation just a little bit too much, or is it not even enough?
Intuition would tend to suggest that, well, if you come out of a long holiday break, they're really going to need the cattle.
And then they will. And they've been short bought for quite a while. Everybody likes to play the game. I don't want to have to buy it until I have to. Maybe the price will go down until the time I have to buy it. Then when that time frame gets there where they have to have it, meet a contractual agreement, now they have to go to the market to buy it, and that's where the highest price generally always is.
So what about all those contracted cattle that they book ahead of time?
There's still a bunch of them. They're just probably a little bit fewer right now than what they need. And we're coming up on the grilling season, so the slaughter pace should pick up over the next couple of weeks and provide a lot of product for the 1st of May coming into the grilling season.
What's your thought on hogs right now?
The lean hog index continues to drop. We're down in the low 70s in that, so all the futures are quite a bit higher than that. But we do note that there's a seasonal tendency for hogs to start turning around towards the middle of this month.
Oh, yeah?
Yeah. So
very much?
It's a pretty good seasonal tendency. It doesn't last very long, but at least it's something to get us off these lows maybe.
So, at the retail counter, it's not really much of a competition. You would think that they would be getting a lot of the business right now just because of the price at the counter.
You would think so, and it's very strange. Apparently, there's still a lot of money sloshing around out there, and that has kept beef. The one thing that we've noticed is we sell a lot more ground beef now than we do steaks, chucks, and roasts. So I think we're seeing a little bit of a pull down to that, but there's a very wide discrepancy between pork and beef that has not had much impact to the consumer at all.
Well, it's good to talk with you again. Thanks for coming into the studio, and always look forward to our discussions anyway, even though they are mixed signals. But thanks a bunch. Chris Swift of Swift Trading right here in Nashville. And with that, Tammy, I'll turn it back to you.